Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Wednesday, May 25th, 2011 is brought to you by Realtic. All right, folks, let's get right into the mix today. We have a lot to cover. The markets gapped lower today on continued worries out of Europe. Basically, what happened overnight, there was a rumor out that Greece was going to have emergency elections. There was kind of a collapse going on, and those rumors actually crushed the futures last night overnight. By this morning, that fear had faded a little bit, and the market had a smaller gap down. The gap down took us to 131.38. Now, the reason why that is important is that it's a gap fill. If you take a look right here, folks, on my 60-minute chart of the SPY, which mirrors the S&P 500, you can clearly see a big gap right here. This is a gap going back to the 19th of April, and that is right around that 131.30 level, which is exactly where the market's open today, right on that gap fill. To me, that's probably the low of the day for the next few days, and that's what I'm going to go out on a limb and say right now. I think the market trades neutral to higher. So far, we've already bounced off that level, basically $1, and we've traded all the way back up. As you can see clearly from the 10-minute chart, here's the gap down, surge up, consolidation, break through the moving averages, go all the way up to the bluish trend line, consolidate. A little bit of a topping tail right there, which told us we were going to pull back. We pulled back, inched up, now pulling back, and the volume is just dying out dramatically. Why is the volume dying out now in the afternoon session here on this Wednesday? Well, because this Friday is the start of the Memorial Day holiday weekend. Again, Monday the markets are closed. A lot of traders are heading out today and tomorrow and on Friday, and the volume will continue to be lighter and lighter. So just keep that in mind, folks. I think it's a very important little factor here to monitor that volume will get lighter and lighter. Tomorrow should be even more dead by around 11 o'clock in the day, and then on Friday it should be a very, very quiet trading day. That should help the upside. I do think the markets have a good chance to trade up to about 133.60 by Friday or next Tuesday. Remember, markets are closed Monday, so either the day before the weekend or the day after the holiday weekend, you probably see the markets hit a 133.60, and then we'll reevaluate next week. Having said that, we did give out some new trade alerts over the last day or so that triggered today, so again, I encourage you to log in or join the research center to get those trade alerts. They are making money left and right. Bottom line is, they're there for the taking. There's a free trial to the research center. There's a free trial to the chat room. I encourage you to all take it. All right, now a couple other things to go over here. Let's go back to the spiders chart, just focus in here. Right now, sideways action on light volume. If we go to the daily chart, which I'll briefly show you, see this little level here at gap fill? That's exactly where we were headed, and that's exactly where we got to, and then bounced right off of it. And I think short term, the low is in until after this holiday weekend at least. And again, we've talked about that to our premium members. We have some positions on the long side for this advance, and that is exactly what we're looking for. So we'll see again where it goes. And again, if you want those trade alerts, just join the research center. You get them all. Everything included underneath the research center is included in your free trial. 1 week, 7-day free trial. Get them now. Get your setups for the next few days. Get your setups for after the holiday weekend, and continue to make some good money like we are making with our subscribers right now. All right, a couple other stocks in motion today. Goldman Sachs up about 50 cents. Not a big gain on Goldman Sachs, but it's continuing to float up. The alert went out over $1 ago to buy Goldman Sachs, so congrats to those that picked this up. Already over $1 in the money on this play here, and again, we'll continue to monitor that. Some other plays out there that look attractive to me. Research in motion. I love the daily chart of research in motion here. Little pivot low. We actually nailed this call right here. I actually bought myself, made a couple bucks on research in motion to the upside on this bounce, then unloaded it, and sure enough, we've come back to a double bottom here, and it's holding pretty nicely. As long as that holds a double bottom, you can look for upside, and I continue to think that you will get a little bit of upside in the next few days on research in motion. All right. In addition, let's take a look at a couple other charts out there. How about Lowe's, LOW? LOW, 200 moving average tag today. That is a long play. And again, I wrote an article on the blog. Make sure you're following the Rant and Rave blog as well, as there's some great articles up there. But nonetheless, the Research Center is for premium members. If you want to be included in that premium based on a free trial, feel free. Just join right up and take that Research Center free trial. We're pretty content that everyone that takes it is making crazy amounts of money on the free trial, and they'll probably stay with us. I had a chat member today who did a trade, and they basically made about 4 times the subscription for the chat in just one trade in the intraday stock chat today. So, I mean, it's there for the taking. It's so easy to do. Even a caveman can do it. And again, I'll borrow that from Geico today just to give you guys that point. All right, let's go on to a couple other charts here. The dollar is really the reason why the markets moved off their lows. We've talked about this in the nightly videos inside the Research Center. The dollar gapped up today on the fear out of Greece. And again, you can see what happened here. Early in the day, the dollar was higher, but the dollar collapsed back down. Notice how it went right to the 200 moving average intraday. That 200 moving average, buying opportunity obviously on any chart, especially here, and you get a nice bounce on the dollar. But either way, as the dollar fell here, that's why the markets moved to the positive side. Now the dollar's gotten a small bounce, and that's why we've actually pulled off the highs of the day. So the markets are still going inverse to the dollar. So if the dollar's moving up, markets are moving down, and if the dollar's moving down, markets are moving up. Now, there are some other stocks out there. There's actually a couple small caps I'm looking at. I think I'm going to do a hidden gem for next week, folks. So, again, that's another reason to join the free trial. You'll get that hidden gem, which is a once-a-month release of a small cap that is undetected by the market and should have a big upside, at least 50% in 6 months, if not more. A lot of times the hidden gems have gone well over 100% on the upside. So just be aware that hidden gem should be out right around early next week going into the month of June. And, again, it should be a fantastic time. All right, now let's take a look at a couple other things here. Goldman Sachs, we touched on, up 50 cents. JP Morgan, we scalped this beautifully today, folks. I just want to go over this scalp, and this is for more intraday stock chat people that are interested in that. Today we had this big first candle surge up, and you had a good consolidation candle. 1, 2, 3, 4 consolidation candles in an in spirit of bull flag pattern. Well, normally we like bull flag patterns, right, in spirit of as well, but you had an even better signal here that was going along with that, which was the 20 moving average, just as you were consolidating here, crossing the 50 moving average. That is called a golden cross. So my alert went out at $42.40 to buy JP Morgan right here. Right in this area right here, folks. This was the buy. The buy went out, and sure enough, no sooner did it go out, we had the golden cross, the bullish in spirit of flag pattern. Then JP Morgan took off to the upside. I said right here at the pivot top, unload your position right around that 42.65 to 70 level, and sure enough, that was good for about 25 to 30 cent scalp on the upside. And again, you're buying 1,500 shares on a scalp minimally. I would think even 1,000, you're still making a good chunk of change there. A lot of players in the chat room are probably doing anywhere between 5 and 10,000 shares or so on that, most likely around the 5,000 mark. So big money being made, and this is here for the taking. I mean, again, I love this. I love the methodology we preach to you guys and we teach to you guys, because it's not that hard to grasp. It really isn't. You just find the prices, you find the stocks, the patterns, the timing, you put the keys together, and you make trades. It's that simple. And again, as I said, even a caveman can do it, in my opinion, especially the swing trading side. So I encourage you to come join the Research Center, come join the chat room, take the free trial, start making the money that everyone else here is making. I mean, there's no sense on missing out on it, right? All right, guys, take care.